Most people addicted to a dream that's actually a trap. They told to buy one rental property at a time, deal with drugs, thugs, and bugs, and hope that in 20 years they will be free. But here's the cold truth of 2026. Being a small-time landlord isn't a passive investment. It's a second job that pays poorly. While you are chasing a few $100s in cash flow, the real players are pivoting the needs-based real estate. They are not looking for tenants. They are riding the silver tsunami. If you are still thinking small, you are staying fragile. Today we are talking about how to actually exit the rat race by changing the scale of your game.
Enter Talks.
Welcome back to Enter Talks. I am Davyd Kyryliuk. We have all heard the phrase passive income. But let's be honest, if you have to approve a toilet repair at 2 a.m. or vet a tenant yourself, it's not a passive income. I've been analyzing the recent shift in the market, specifically the insight from Danny Robinson, who sold over 400 turnkey homes only to realize the model was broken. Why? Because single-family rentals are 0 to 100% occupied. There is no middle ground. One bad tenant, one major repair, and your entire year's profit is gone. In 2026, we do not want active passive, we want resilient system. The smartest money right now is moving into what we call needs-based real estate. Think about it. In a certain economy, what will people always pay for? They will always pay for a place to live. And as they age, they will pay for healthcare. In this silver tsunami, 10,000 people are turning 65 every single day. This isn't just a housing trend, it's a demographic tidal wave. By investing in senior housing or Class B multifamily, you are not just buying real estate, you are buying into necessity. Class B is the safe haven. When the economy is tight, Class A tenants move down to you. When it's booming, Class C tenants move up to you. You are protected from the downside while capturing all the upside. Now, let's talk about biggest mistake. Trusting the wrong people. We have all heard horror stories with contractors, people who send fake photos or disappear with your deposit. But the real lesson isn't just don't trust contractors. The lesson is that scale requires elite operators. You cannot build a billion-dollar portfolio with a runner and a spreadsheet. You need vertical integrated teams. I want to stop here for a second. We have seen so many people get burned by the trusted partners who simply couldn't handle the scale. Have you ever had a deal go south because of the partner or a contractor? How did you handle the accountability? Let's discuss in the comments below. And if you are finding value in this high-level look at the market, subscribe to Enter Talks. We are building a community of investors who value return on life as much as ROI. The ultimate goal isn't own 1,000 houses. It's to hit your freedom number. If you need 100,000 a month to live on your dream life, you don't need to hustle forever. You need about 15 million liquid working for you at 10%. That's it. That's the finish line. Every deal you do today should be a step toward that liquidity, not a step toward more headaches and more problems. This is why I advocate for the LP model, being a limited partner. You give the capital to the best-in-class operators. You get paid first, and you let them handle the lawsuits, the maintenance, and the stress. You move from the operator's side of the table to the owner's side.
Enter talks.
As we move further into 2026, the shiny object syndrome will kill your progress. Stop chasing the 400 home run that might never happen. Focus on a stable, high-quality B-class assets and the senior housing wave. Stand on the character, invest in trust, and measure your success by your peace of mind. The era of tired landlord is over. The era of legacy investor has begun. I am Davyd Kyryliuk, and this is Enter Talks. Let's build something that lasts. I'll see you in the next one.